deposits. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admirmarkets.com, and you will find everything written down there. This is me. My name is Jens. I'm the German guy. I'm talking from the Berlin office from Admiral Markets. We are a big international broker with over 18 country offices. So my English made in Germany, but hopefully some of my quality too, but I'm not the main speaker. The main speaker is the day trader of today. Today it's Monday, so in a couple of seconds it's Jay's day. On Tuesday it's Paul's day. On Wednesday it's Giancarlo's day. On Thursday it's Marco's day. And on Friday it's Dirk's day. Our leading day traders live every business day to the same time. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. For example, DAX 30 CFD, one of our bestseller, with a fixed spread of just 0.8 points to the main trading hours. Mini lots trading, choosable leverage, MT4 or MT5, it's your choice, and many, many more. Check all them out on admirmarkets.com. They will find also something about our regulatory background and how to contact us. You can call us, you can send us email, or visit the other channels like YouTube or Facebook. Everything is linked from admirmarkets.com. Enough from my side. Now it's time to Jay. Good morning, good day. What's your view to the markets today?
Die Stummschaltung ist aufgehoben.
Good morning, Jens. Good morning, traders. I'm laughing because we had a very long webinar last night with my traders, and we also had technical problems. And then this morning, the link is down. And all right, it doesn't matter. Let me show my screen, and off we go. And welcome to the few traders who are in here today. Let's see how we can make some pips this week. Excellent. So what are the headlines overnight? Risk is currently on. That's the sentiment that we're talking about. And we're seeing that equities are green in Asia, and the yen is experiencing some weakness. And that's a typical situation for risk on sentiment. Why? We had very strong U.S. jobs growth report last Friday, and then the Trump and Kim summit, U.S. North Korea, is back on, and that has led to positive Asian equity sentiment actually carrying over from the States. So safe havens, as I said, like the yen, are currently selling off, and that also on the back means that the Nikkei 225 is seeing some strength. But as I said, we also had Chinese equities up, and we had Australian equities up. Aussie also got a boost from data. As you can see here, we beat on retail sales, we beat on company operating profits, and the ANZ job advertisement month on month came in better than expected. So that is carrying over and is leading to some very good strength and inflows into the Aussie dollar right now. Weakest currency so far this morning out of or in the London session is the pound itself. We had just now a beat on construction PMI, and the pound didn't react to it at all. So there is some inherent weakness in the pound. Canada launches WTO and NAFTA cases on versus the US metal tariffs. So that's a negative going on there. Trump is doing his best to mess up economic growth. Excellent. UK construction, as I said, factory orders and BOEs 10 rare, they're all coming up, and construction beat didn't care. Currency simply didn't react to it. The trade EURCAD is still open. Last week we had some very negative sentiment towards the euro. And unfortunately, I traded it in a live account, so I forgot about adding to the position at the lows in this account. Sounds like a cop-out. Honestly, I don't care what you think. It is what it is. Trade is still open because the panic was overdone in my long years of experience. All right, I did not see the Italian political situation as really leading to a replay of end of Eurozone 2.0, so to speak, because we are in a different situation than we are last time. And I have learned via the School of Hard Knocks that the establishment, I love that phrase out of the US, wants the EU regardless of what the populace vote. All right, nobody gives a crap what we vote. This thing is happening. It's being pushed through, and it's almost like I'm living in a dictatorship. So it is what it is. I'm not betting against it. Overnight, we saw here the strongest currency being the Aussie dollar, and in tandem, the New Zealand dollar just participated in this risk-on environment, and then the yen seeing outflows, and the dollar weak and the pound weak. We can all see it here in the chart. Risk events starting Today, what's on the docket for this week? What could move the markets? So we have the construction PM came in better than expected. I'm saying it for the third time, sorry guys. Pound didn't react. We have current account better than last time expected. So that's another positive for tomorrow night. Or tonight. We have Asian PMIs coming expected in line, and then we have the RBA. Only issue for the Aussie dollar right now is that the RBA recently said several times, we don't want a very strong currency. So we all know that they're not going to move the rates whatsoever. We all know the economy is recovering and is doing nicely. What we don't know is what are they going to say in terms of a strong currency, which it's portraying at the very moment as we speak. So we'll have to see. That is a potential risk for the Aussie dollar on the docket for tomorrow. Then we have services PMI expected to come in line, slightly better. We have some speakers out of the BOE. We have in the US non-manufacturing PMI. Last Friday, the ISM manufacturing PMI came much better than expected, and we already can see here that the services PMI is also expected to come in better than last time. And we did this 3.5-hour process last night in the webinar on how we're using this tool to find equity ideas because services, because of the PMIs and the US equity markets are highly, highly correlated. All right, then we have GDP a day after the RBA. And you can see here there's some strength in the GDP expected to materialize in a higher number. Out of Canada, we have the trade balance and building permits. Building permits is a leading indicator, and the Canadian housing market is overcooked, similar to Australia. So I'm keeping a close eye on those two numbers if and when they, when they come out. I apologize. On Thursday, also trade balance and Halifax HPI, I'm interested to see if the pound may react to that. And then we have unemployment claims expected to come in a little bit worse. This is also a leading economic indicator. Paulos is speaking on Thursday evening, my time, and then on Friday we have trade balance out of China. Obviously, with the trade tariff discussions / war going on between the US and China, this is of interest to keep an eye on. And then we have labor market data out of Canada. We only have one slide in terms of, if the computer plays along, in terms of commentary to go deeper into the econ numbers. Manufacturing, solid pace of growth in manufacturing and in services in the US. That tax deal that Trump did has pushed us up the curve again in terms of where we are in the economic cycle. And so we are toppish. We looked at that last night, and we are toppish in terms of where we are located in the cycle. So that means in terms of equities, mining names are outperforming, oil and gas are outperforming when we're right at the top of a cycle. All right, Canadian dollar labor market productivity on Tuesday is expected to come in a little bit higher. And Friday, the employment change. Last time we lost 1.1K, and we're expected to add 17.4K in May. Now, as always, when it comes to job data, we look at the split. We do this in Australia as well, for example, between part-time and full-time jobs. And the better quality type of job are the full-time jobs, obviously. So we want to keep an eye on that when the numbers came out. In April, we had a lot more full-time jobs printing than the loss in part-time jobs. So that was positive. Wage growth, year on year expected around 3% in Canada. Quebec just recently in April raised their minimum wage. So this is actually expected to be feeding into this number in terms of wage growth when the labor data comes out, all right? I know it's all detailed information, but that's unfortunately the game that we're playing. Euro was all about politics last week, but currently 5SM and the League formed a government with a more moderate finance minister by the name of don't know how to say that. Good morning, Dees, there you are. Excellent to see you. And the market reacted with a relief rally in the euro, which was my expectation. I was long euro too early, happens. Risk premia is still expected to be remaining quite high in the euro because the situation is fluid, as we used to say. In Spain, the prime minister was ousted via a no confidence vote, and the socialist leader Sanchez became prime minister. There's a lot of corruption in Spain that went on, and the voters are naturally unhappy about that. it's still not expected that the Spain situation is really going to feed into any negative Eurozone reaction by the traders. So Sanchez vote to honor the budget, which Rajoy passed, and so that is a relief to the market. Aussie dollar. We expect the rate to remain on hold, as said. The two topics that are of interest in Australia are the household debt and the overheating housing sector, similar to Canada, by the way. So if you look at highly leveraged, let me go back here, for example. If you're looking at some potential short plays, have a look at the Aussie banks that have a bad, in terms of quality, loan portfolio, mortgage portfolio, and have a look at the same situation in Canada. Now, we always need a catalyst why a short or a long trade may work. And in the terms of Australia, we have the Royal Banking Commission interviewing the top 4 banks precisely about this topic or these topics at the moment. And what's happening there is that we're having the housing bubble 2.0. It is the exact same thing that happened in the US in 07-08 is happening in Australia right now. So the commission concludes in September, but there's a lot of testimony, and the testimonies are all public, that are already bringing out into the light some unbelievable fraud situations within the largest banks. So mortgage documents were fraudulently put into the system. Again, we all know this play because we've seen it 07-08 out of the US. So we have that on the radar for the Australian economy. Wednesday GDP expected to come in higher, 2.7 versus 3% on a year-on-year basis. And why? Because company profits, and we saw that just now, they came in better than expected this morning or last night, and net exports are expected to have been strong drivers. So naturally that feeds into GDP. Monday data was strong. I think that concludes the slide. Hello, computer. Thank you very much. Positioning. Aussie dollar on its way to a long signal. Last week, I know I said it's a long, and now a situation changed and we're continuing, but this is a long coming up. Swissy is a long coming up. And these trades are based on the expected holding period of these trades is not swing trades. These are more like almost position trades. So if and when these trigger, not if, they will trigger. They are going to trigger. They are going to trigger. And when they trigger, these are trades that will be held for days and days and weeks and weeks. So they're longer term trades, just as an explanation. Volatility, we'll always keep an eye on volatility. So in the euro, it's coming off a little bit. In the pound, it's increasing a little bit. In the yen, it's coming off a little bit. And the VIX is sort of unchanged. This is for US equities, okay? Option pricing for this morning, bullish dollar yen, pound, cable, Aussie, euro yen, euro pound, and euro Swissy. And on the bearish side, out of the option pricing for this morning, short dollar Swissy. In terms of option flows, bullish for Monday, pound, Canadian dollar, yen, and gold, and bearish for Monday, Aussie, euro, and Swiss francs. So not that easy to figure out the puzzle this morning. But again, Mondays is construction day. The campaigns are being planned. The institutions are using volume to get into positions. So then these positions are expected to be ran for Tuesday, Wednesday, Thursday, and on Friday, a square up day where you reap the harvest, so to speak, that you planted on Monday. So today is the day where they're all positioning. Quick slide on the largest speculators, and their dollar short is coming off sixth week in a row where they're reducing their short US dollar bets. But 10-year treasuries, they're extremely short. So if everybody is short, let me ask you, if even my mom is short and her dog, who's gonna short the 10-year treasuries? Okay, I hope you're getting the drift. Exactly. Potential trade for this week, long Aussie US dollar. Aussie, solid economic numbers this morning with seasonal Aussie strength, and copper really strong overnight. Dollar, June 13 hike by the Fed is already priced in. So that's done and dusted. Only question is, how many more hikes this year? Are we going to come out 2018 with 3 hikes or 4 hikes? And that depends. At the moment, slightly slightly questionable if they're going to go for a fourth hike. We'll have to see. Why? Because of the trade wars. That poses an imminent threat to the dollar and to the global economic expansion, which is not synchronized anymore. Chris, you know about what I'm talking. Well, you know what I'm talking about. Trade structure, 2 limit buy orders, and the stop loss will be around 59 pips off of the average price that we worked into this long. Risk for the trade, obviously, if the risk off, the sentiment is turning, then it's bearish for the Aussie because it's highly sensitive to risk sentiment. And we have the RBA tomorrow, and if they come out with a dovish hold, if they include something in their statement like, hey, we don't want the Aussie this strong, then that's going to turn out to be a good entry point, in my personal opinion, to buy that weakness in the Aussie dollar. For the US dollar, obviously, if US China, US NAFTA, US Eurozone trade wars, if those were to come to a resolution, that would be bullish for the US dollar. It's really kind of amazing what the guy is doing. I mean, he's starting a 3-front war with everyone. Okay, here is the picture of the trade. We are very, very strong. We have aggressive buying away from the POC at the moment, and we already way beyond the average daily high for today's expectation. Question is, will there be a pullback? Of course there will be. And at that moment in time, if and when it pulls back, you want to read the chart and see if you get the correct reaction in terms of volume, and then the reaction based on the volume of price, and then happy to long that pair. Again, I did it again. Do you see that? Aussie. Oh, it's correct. And then I'm happy to long this pair to make some money. If you want to take a look at the live chart with me real quick, let's see if it goes into the picture. Yep, it's live. Okay, so the orders are in. It could be that this POC is holding, but it's still, to me, not cheap enough. The discount is not enough for me to long this one. Let's see what it's doing on a 5-minute. Yep, strong trend intact. Okay, I'm happy to buy where you can take a look here where I'm happy to buy. If it goes, it goes. There's a longer term level right here, so I have some confluence, and this is the lower edge of value. It's just a statistical number. It's not really that significant, but it's also in the area of a role reversal where we had these highs, and that could act as support. Hope it helps. Guys, make some money this week. Thank you for showing up. Small group, but maybe it's growing again when more and more people realize the link. Jens, thank you for the opportunity to do this with you on a Monday morning. And all the best to my traders. I hope we make some good money. Timo, thanks for showing up. I'll speak to you in a few minutes.
Thanks. Tomorrow is another day. Tomorrow is a new trader. Tomorrow is a day of fall. So hope to see you all again to the same time. If you'd like to see this video again or this live webinar as a video in a couple of hours available in our YouTube channel. Greetings from Berlin office, and all the time, good trades.